Well, hello everyone. Thank you all for being here. My name is Bullet Manali, and I'm with Red to Black Peer Financial Coaching. And today we're just going to go over credit and debt. And at any times, if you have a question, feel free to interrupt. I don't mind at all stopping and trying to answer a question you might have. Or you can also utilize our chat that we have. I just can't check it. So if someone can be sure to look at that, we should be good to go. But yeah, awesome. Thank you so much. Okay, cool. So yeah, today we are talking about credit and debt. Before we get into anything, I just want to give you a little bit of information about Red to Black. So Red to Black is a student organization that answers students' money questions through individual coaching sessions, educational presentations, outreach booths, and resource referrals. We are comprised of undergraduate, master's, and PhD students majoring in personal financial planning. And our goal is to help get students from out of the red and into the black. So that is why we're called Red to Black right then. And just a little disclaimer for everyone. This presentation is only for educational purposes. We do not give any legal, investment, or tax advice. If you do need any advice on that, you can contact an attorney, investment professional, or a CPA. All right, so credit and debt. Today we are just going to get a really good overview of what credit and debt is. And, we're going to understand the importance of a credit report. We're going to learn how to get and read your credit report. We're also going to learn how to interpret your credit score and understand what impacts that score. We're going to learn how to build a good credit, and then also going to learn how to protect your credit. So I've worked before at a credit union here in Lubbock, Texas. And from the time I started till, this year, I get asked all the time questions regarding credit and debt. And here's just a few of them. So what is a credit report, and why does it matter? People ask me, how do you check your credit report? What is a good and bad credit score? And then a lot of the times they also just, want to get a credit card, but they don't have any credit, so they don't really know where to go. So those are just a few questions that people ask a lot of times every day. And it's people from, an 18-year-old kid who just graduated high school to a lady who is been working for 30 years. Everyone has credit questions, and it's just better to ask these questions so you can get a better understanding of them. So we're going to start with credit reports. A credit report shows how much available credit you have, how much of your available credit you're using, whether you've made your payments on time, whether debt collectors have reported that they're attempting to collect debt that you owe. All this information is stored in your credit report and is used to create credit scores. Many lenders use credit scores to decide how much money they can lend you and how much interest to charge. In general, the higher your credit score, the better the loan terms may be. And there's 3 different credit bureaus that you can check throughout the year to actually get your credit score. Now, these 3 credit bureaus are known as Equifax, TransUnion, and Experian. You can obtain free credit reports every 4 months by utilizing these 3 credit bureaus. So in a sense, basically, I'm sure y'all have all heard about like freecreditreport.com and other sites like that. Is that something y'all have heard of?
Yes.
So these websites don't actually offer a clear look at your credit. They don't actually tell you your credit score. So you can check these three websites quarterly, one each quarter. So every 4 months, and keep an eye on your credit. So like for example, 1 month, you can obtain your free credit report from Experian. And then 4 months later, you can request another one from Equifax. And then 4 months later, you can get your credit report from TransUnion. And then you can just follow this same pattern every 4 months in order to maintain your credit score and understand, where you're at. Another thing about these bureaus is that each of these are the three nationwide credit reporting companies. And I'll tell you a little about what they do. So they collect.
Why is it important that people do check?
So it's very important to check your credit report, because there is a lot of fraud that happens, and I'll get that into a little bit later about how to protect your credit. But credit's something very important that banks and lenders use to establish whether you're like trustworthy enough to get a loan for your car or bank. And a lot of times people can steal your social security card, steal your personal information, and get credit cards from your name and use those credit cards and max them out. So checking every 4 months is a way to make sure no one has done that. And so that's why I would say it's most important, just so you know no fraud's going on, because it happens a ton in America for sure. So yeah, that's why I would especially check them every 4 months, and it's free to do. Some other websites might you might have to pay for your results, but these three are free, and they won't affect your credit as long as you're doing a soft credit pull, which I'll also explain later.
Okay. As international students, even if they know they haven't done anything to affect their credit, do they still need to check them if they have a social security number, just to make sure there isn't somebody using their social security number?
Definitely. So so if you have a social security number, it's free to do, and I would definitely look at it. So whether or not you've actually filed for a credit or tried to get a credit card, it doesn't really matter. Your account is kept with, like, each credit bureau has an agent that looks over your account whenever you get that social security card. So it's there to protect you. And and then each of these companies, they do have different formulas to calculate their scores. All of them typically start with the information on your credit report. And two of the most commonly used credit scores are FICO and Vantage Score. And we can go into a little more of that later. So just a little bit about how to obtain your free credit report, and why to do it and the benefits of doing so. So here I'm actually going to share a new screen, if I can find it. Okay, right here. So this is just an example of a credit report with our example here, Elizabeth Duncan. This is what happens whenever a loan officer or someone at a bank pulls up your credit report. This is actually what they're looking at. And you can see here at the top, this has pretty much all of her identifying information, has her social security, anything to really ID her. It has her employment history. This is something that some lenders do take into effect when looking at your credit report. I'm probably gonna just skip this. This is more for when they're running the search. These different little boxes kind of mean something to each financial institution. So I won't really go over that, but right here is where it'll actually show your scores. And then below that, we have like the credit information. This is kind of like a total history or summary of your credit information. It tells you if you have any public records or collections, the different types of accounts you have, as well as the balances on them. Your credit report will also show any public records. So if you've ever been sued or had to file bankruptcy, all of this stuff is stored in this credit report and available to whichever loan officer or agent is looking this up. It also shows if you owe any money or if you've been put in collections. And if you've been put in collections, that just means you haven't paid on a debt that you owe somebody. So they'll also put this in here. And then this next part is the trade lines. And this just goes over each single account or credit card you might have, you know, out in the world. So if you notice one of these isn't yours, so maybe this credit card ABC retailer isn't yours, then there'd be a discrepancy and you could report to your agent. So it's important to kind of know what you're looking at while looking through these things. And once again, if you do want an example of this, just let us know and we can drop it into the chat box. And lastly, down here, it just shows how many times you've inquired. This is another place you could check to make sure there's no fraud on your account. So for the last, I think it'll look at your whole history and pull up the last 5 inquiries that you've done. And so if you notice that one of these isn't yours, then you could also report that discrepancy. Okay. So I'll switch back to this. And usually,
sorry.
No, you're okay.
Is there a time when other people would like have a reason to check your credit report? Because I mean, obviously, if you're about to purchase a car, they might want to check your credit. So that would show up in the 5, right? It's not just you as an individual checking your credit report. Yeah, so it's not just when you inquire, it's when anybody inquires on behalf of you. When it's when they do it not on behalf of you, that's whenever you know, it's kind of a problem. Okay, so it would say in that case, like if it wasn't me, the individual, but it was like Honda of Lubbock or whatever, you know, it would say Honda of Lubbock inquired. Is that correct? Yeah. So it would say like inquiry. It'd say the date, so you would know the date, and then it'd be like Citibank or Alliance Credit Union, and it'd be listed there, so you could actually see if that's correct. If not, then you would probably notice. Right. Yeah, but yeah, and they do it anytime. Any banks do it anytime they open accounts or do loans. But we'll go into it later. There's a difference between a hard pull of your credit report and a soft pull, and I'll get into that a few slides later. Cool. Okay, thank you. Yeah, no problem. Actually, I forgot. I need to share this video now.
Most everybody knows by now that a credit score is something a lender may look at when considering you for a loan. The problem is, many people don't know much more than that. So here's a simple way to think about it. A credit score is a number. That number is calculated using a formula that evaluates how you pay your bills, how much debt you carry, and how all of that stacks up against other borrowers. The score can help predict, among other things, how likely you are to pay a creditor on time. The more positive the information in your 3 credit reports, the higher your scores for each are likely to be. And the higher your scores, the more likely you are to receive beneficial terms for loans and credit. Make sense? There are many different scoring formulas used by lenders today. And even the same formula used to evaluate your 3 reports on the same day can produce a different score for each. Why? Even though virtually every major lender in the U.S. provides information to the 3 national credit reporting companies, not all creditors report to all 3 all the time, and each may report on a different cycle. Fortunately, TransUnion helps simplify things by providing an easy-to-understand graphic along with each score you received to show how you will rank against other credit-active consumers in the U.S. and are likely to be viewed by lenders. So whether the scores associated with each of your 3 reports are just slightly different or significantly different, you can see how each is likely to be interpreted and used by a lender. Let's take a look at how this can play out. In this first example, the score for each report is somewhat different, but in each case, the graphics provided help clarify that lenders are still likely to view all 3 of these scores as very good. In the next example, however, one of the scores falls significantly below the other 2, which, as we can plainly see via the graphics, would likely cause that score to be viewed as good instead of very good. If we look back at the credit reports behind each of these last scores, we'd likely find the core issue contributing to the lowest score is something like a late payment or other negative item appearing on just that one report. If this was your report and you felt that item was inaccurate, it would certainly be cause to investigate further. On the other hand, if it was accurate, you'd be wise to consider yourself lucky it only made it onto one of your reports and get busy modifying those core credit management habits to avoid similar problems in the future. Bottom line, plain and simple, there is no one score or scoring formula that's used all the time. And the specific formula a lender chooses to use to evaluate the content of your credit reports is absolutely beyond your control. What's within your control is your ability to handle your credit obligations responsibly each month. And take simple steps to keep yourself in good credit standing, including reviewing your own credit reports regularly to ensure each consistently paints you in the most accurate and positive light possible. If we can leave you with one final thought as we wrap up here, it's this. Focus your efforts on the core credit management habits that can help build healthy credit reports and ultimately those desirable credit scores for you. And you'll be well served when it comes to your credit health. Thanks for giving us the opportunity to share this important information. We invite you to learn more anytime at www.transunion.com.
So yeah, that video does a great job of explaining kind of what's going on, or what I explained in this last few slides. She does a good summary of all of that, and does a really good job of telling us, why our credit score is important. Skip here, having some problems. Okay, so this is that representation that she was kind of showing, that shows you having an excellent score to having a bad score. Like the video mentions, a credit score is an indication of a person's credit worthiness, or how likely the individual will be able to repay any credit extended in a timely manner. FICO scores ranges from 300 to 850. No matter where your score is, it is important to remember that improving your credit score, no matter where you fall on this scale, will increase your opportunities and decrease your cost. basically saying that as you work and better your credit, you will have to pay less interest on loans that you possibly get, and there's a better chance that you'll actually get that loan. So scores in the range from 300 to 649 provide challenges in lenders providing services. Typically, only secured loans, which is a loan that requires a deposit towards the beginning of the loan, are given for people in this range. Scores in the range of 650 to 749 or 750 will typically be eligible for most loans and will achieve good rates. Now, if you have a score of 750 to 850, you're going to be eligible for the most loans with the lowest interest rates and best terms. So that's why having those core duties down and making sure that you're checking your credit score and utilizing your credit responsibly can help you get into that excellent credit range score. And that's why it's really important to make the correct payments on time. Oops. The data the credit scores show is grouped into 5 categories: your payment history, the amount you owe, the length of your credit history, the type of loan, and the inquiries. So the length of credit, credit mix, and new credit. So these are the actual things that make up your credit score. And I think it's really important to note that more than 50% of your credit score is based on making your payments on time and, how much do you actually owe? And I don't know, if you think, because a lot of people don't understand how credit scores work, and they believe because they've had a credit card for so long, maybe that should be attain or get a better credit score for that person. But in reality, it's just really these two things that make a huge percent of your goal. So there are different various types of credit. The most that we're used to and that we see are given through loans. So examples include buying a home with your home mortgage, getting a car with an auto loan, using credit cards, and getting student loans to pursue your education. So out of all of these, one I would like to speak about next is credit cards. What are y'all's opinions? Are credit cards good or are they evil?
I feel like both.
Yeah. Why do you think they could be both?
Well, like in my case, I was able to pay my medical bills with them because I couldn't pay out of pocket. But now I have a lot of debt and the interest rates have started.
Exactly. Yeah. So yeah, you were able to use it for that time where you needed it, but now it's kind of like, oh man, yeah, now I got to pay all that interest back. All right. Someone else? Does anyone else want to share? All right. So yeah, it depends on the person. I like to think credit cards are great, but at the same time, I've been in situations where, yeah, I've used my credit limit all the way to the limit and had to pay interest on that, and it was not fun. So I'm just going to talk about the different advantages and disadvantages of credit cards. So the advantages are, you're establishing and building a credit history. Once you establish that, and if you have good history, they will see it from the very beginning. Whoever's looking at your credit report will see your history and see that you've established it. and that's always great. There's convenient methods of payments. Credit cards also help improve your credit score. They do protect you in cases of emergency, as Kathleen was saying. In certain credit cards, they have sign-up bonuses, cashback rewards, different types of rewards. And I'm pretty sure later on I'll share a website with you where you can go through and search any type of credit card and why you would use it, and you know, what to do if you're like looking for a certain reward. You can look for that. You're also able to consolidate your expenses to one place with a credit card. And a lot of credit cards do have protections from theft and fraud. So if someone does steal your card, or you know, gets your credit card and uses it, well, there's a process in place to where you can let the card provider know of the discrepancy, and they'll go in and investigate it and then give you your money back if it wasn't you. So disadvantage of credit cards, they do have higher fees, convenience fees. They have higher interest rates, so that's not great. For those who have bad spending habits, it could be bad because it allows you to spend more than what you actually have, because it's allowing you to spend money that's not yours. High balances can hurt your credit score. Not paying on time can hurt your credit score, and when that happens, you are having to use your future income to pay off what you've spent. And if you were here last week, we kind of spoke, last week we spoke about the wealth destruction cycle, and that's kind of what's happening. Is you're using money that you didn't have, spending it all, and then now your future income you have to spend on what you owe, and you can't create wealth that way. So those are some major disadvantages. So back in that video earlier, she was talking about a few like core practices you could do, and these are things to build good credit. So how do you build good credit? First of all, even though you might have a credit limit of like, $2,000, you don't want to spend more than what you can pay off. So if you only make $500 a month, you don't want to spend $1,500 on the card, because then you're going to have to spend future income on what you owe. So you don't want to spend more than what you have. You want to keep track of how much you're spending so you don't overpay. Then at the end of each month, you want to pay off your cards in full. That's kind of, something that I like to share with people, is that paying off your card at the end of each month is better for you, because you're not having to pay that interest. And each time you pay, it eliminates those interest payments. And those are, you don't need to pay those if you're following these rules. And then lastly, if you are just starting out, a secured credit card may be best. Does anyone know what a secured credit card is, or have y'all heard of it, or at least heard of the words?
I have one secured card.
You have one secured card? So awesome. Yeah. So when I first, I started at Alliance Credit Union when I was 18. And yeah, it's, you go through the same process. I don't have any credit. How do I start establishing credit? What do I do? And so you look at the different ways you can do that. Well, a secured credit card is a great way to do that. And I'll just go through the explanation of what a secured credit card is. A secured credit card is a credit card that is backed by a cash deposit, which serves as collateral should the cardholder default on the payments. The deposit aside, the secured credit card functions like any other credit card. The consumers typically get to obtain this secured credit card to improve their credit scores and establish history. Secured credit cards typically have lower credit limits and more fees than unsecured credit cards do. All this to say that if you don't have any credit established, and you really just need a starting point, a secured credit card is the best route to go. Basically, because without that credit score, there's no way that we can, or the lender can tell that you're able to make your payments on time. You're able to follow all these different rules that you need to follow. So getting a secured credit card protects the lenders if you happen to default on your credit. So if you did default it on your credit card, well, then they can just take that money and you'll just they'll take that money and pay the amount that you owe. So really, it's just a secured credit card is a great way to protect yourself, and a great way for the lenders to protect themselves as well, because they have that collateral there. And once again, it's just a great start for anyone who doesn't have credit to start getting credit. Okay, here are some additional words you should know when getting a credit or a credit card. When you're doing your research, you need to kind of know each of these words, kind of what they mean. Know that there are some times where a provider might send you a credit card and say you're going to have 0% interest for the next 3 months. And that's what an intro rate or teaser rate is. And that's what they use to kind of get people to buy into this card or use this card. They give intro rates. So just be wary of that. Know that there are grace periods. So if you can't get in a payment on time, they'll usually give you a 15 to 45 day grace period. And then these are just a few other words that would be introduced as you look through your research for credit cards. So here are the trouble signs for if you're going to have bad problems with credit. If you say yes to any of these questions, this might indicate a problem. Do you only make the minimum payment each month? Have you researched your credit limit on any of your cards? Do you wait for your monthly bill to determine how much you have charged? Do you get cash advances because you do not have enough money in your checking account? Have you been turned down for credit or had a card canceled? And then, are you unaware of the interest costs associated with carrying your credit card balance? So if you say yes to any of these, then there's a good chance that a credit card could hurt you in the future. And that's, if you said yes to any of these things, then it's important to, go in and you can ask your provider. You can make appointments with Red to Black. There's a lot of things you can do. So if you have said yes to any of these and need to know what to do, well, later on I can tell you how to help. Next, I'm just going to go over the common myths and pitfalls regarding credit card. So as it has been mentioned, a credit score is the numerical value calculated from the information in your credit file that is used by lenders and landlords to access your credit risk at that time. So that's what a credit score is. A credit report is the summary of your financial reliability, and it's mostly just your history of paying debts and other bills. So the next myth is checking your credit will lower your score. And I mentioned this earlier, there's a difference between a soft pull and a hard pull, or they call them soft inquiries or hard inquiries. So at least in my history or in my past, when I've pulled a soft inquiry for someone, it's to open up an account. And it's not to get a loan or anything like that, because usually a loan officer doesn't look at it, but sometimes we do, or different institutions have to check your credit score to see if you could possibly be available or be able to accept a loan. But a soft inquiry is where you or the company is simply looking up your information without seeking credit or checking your own credit score. Similarly, if you already have a credit card or loan with the lender, they may review your account from time to time. This account review inquiry won't show up when lenders request your reports or scores. So when you do a soft inquiry, it won't show up in those inquiry section at the bottom. Hard inquiries happen when a creditor checks your credit for the purpose of giving you a loan or credit card. A hard inquiry can affect your credit score and remain on your credit report for 2 years. So as I was mentioned, or we were talking about earlier in the inquiry section, those will pop up only for hard inquiries where you're trying to get a loan or credit card. Another myth is that paying off your card each month is bad. If you do have one, you should pay off your credit card in full every month. Leaving that balance will not help your credit score, and it will actually just cost you money in the form of interest. So each time you don't pay that full balance off, you're collecting interest, and that gets added onto the next month, which gets added onto the next month, and the interest costs just keep rising, and it's kind of crazy. And then, yeah, as I was saying, opening a credit card will hurt your score. That is a myth. The first step a bank takes when you apply for a new credit card is to make either a soft or a hard credit inquiry. And once again, those hard inquiries will negatively impact your credit score on your FICO or for your FICO score. But if you only have like 1 or 2 inquiries within the last 12 months, the impact will be minimal. So if you are trying to get a loan, it's really important not to do more than 1 or 2 hard inquiries. And you know, they do understand if you're shopping around for, you know, different credit cards and they happen to pull a hard inquiry on you, but it only hurts if it's a hard inquiry. So, you know, just make sure you don't do it often, or else it will have an impact on your score. Another myth is that if you do not use a credit card, you should close it. So when you close a credit card, if the card you close has a small credit limit, you may see little or no effect. But if it has a large limit, closing that card could have a big impact on your score because you're lowering your total credit limit, which is not something you want to do because that's about 30% of your credit score, as stated earlier. So closing a credit card account isn't going to help you. You know, it just depends on how you're using it and what the actual balance is. And lastly, the last myth is one late payment will not hurt your score that much. As we were saying, there is a grace period, so you should be safe if you get your payment in before that 30-day mark. Any later, your credit score could be in trouble. So basically, if you go 30 days without making a payment, that's going to be reported onto your credit score. So that's why it's important to get it in within that 30 days. And there's not like a set limit that will actually drop. Okay. So this right here, it is the website I was talking about. You can check out different types of credit cards and really narrow down what you're looking for. As far as like if you want rewards with it, you can look at the interest rate that's associated with it. There's a lot of different things that you could research. So www.creditcards.com is where you can explore those options. And just kind of to wrap up here, at the beginning, we were talking about kind of why it's important to look at these credit reports. So we're going to talk about what do you do when your identity is stolen. So identity theft happens when someone uses your social security number or other personal information to open up new accounts, make purchases, or even they can use it to get like tax refunds. So most people who experience identity theft must take several steps to recover. IdentityTheft.gov is the federal government's one-stop resource to help you report and recover from identity theft. And the site provides step-by-step advice and is helpful resources like easy-to-print checklists and sample letters to help go through this process whenever you do get your identity stolen. So yeah, you'll want to put a fraud alert on your credit report. You will want to contact any institution that's directly affected. So it could be your bank account, usually something like that. You'll want to let them know that someone has stolen your identity. You'll also want to contact the Federal Trade Commission, file a police report. And you know, the biggest thing you can do to prevent all this is protect your social security number and beware of people trying to steal that. So yeah, these are the steps. And like in Lubbock, I think the DA's office, they might even have like a special unit for whenever your identity gets stolen. So that could be another resource. Am I doing good on time? Do I need to finish? I only have a few slides left.
We've got about 8 more minutes, so I think you're good.
Okay, cool. Okay, so to avoid identity theft, you'll want to do these things here. You want to keep financial records, Social Security, and Medicare cards in safe places. You'll also want to shred your documents, like any bank statements, any important statements or documents with your information on there. You'll want to shred. You'll want to take out your mailbox as soon as you can. As soon as you see it, just take it out, or else people can walk by and take it right out of your mailbox. It's pretty terrible, but people do that. Another thing people do is, you know, they try to get you to give their information away over the phone using scams, or usually they're mostly scams, because I don't know a financial institution that would require you to ever like say your full social security number. I don't know, that seems a little crazy. Usually they'll ask you questions and maybe ask like the last 4. So yeah, don't give anyone any information like your social security card or credit card numbers over the phone. You'll want to avoid clicking links that you're unsure about, especially emails. That happens a lot, where I saw a video the other day where this guy, he clicked a link that someone emailed him, and that link opened up to some fake like phone provider asking for his information, and he typed in his email and his password, and then they stole millions of dollars from him just by getting those 2 things. He was able to hack into his email account, his bank accounts, his investment accounts, and yeah, so definitely don't click on any links or emails that you don't recognize or you're unsure of. You want to create strong passwords and use 2-factor authentication, which most websites use nowadays. And yeah, do not use public Wi-Fi to access that data. So do not go to J&B Coffee or Walmart and pull up your account, because anyone could be on that Wi-Fi and could access that information as well. And yeah, lastly, you want to check your credit report regularly. Those three credit bureaus I mentioned earlier, they all do free credit reports for you at least one time a year, and you can use Equifax one time, TransUnion one time, and Experian one time. And that's how you do that. And then, yeah, so you want to take action too. You can go to annualcreditreport.com, and it does give you a free report, but that report, as I said, it's not going to show 100% accurate of what your actual credit score is. It just gives you kind of like an estimate. So that's not anything that, is set in stone. Those are just estimates. You'll want to review your report for incorrect or old information, be proactive and initiate change. Be careful what information you're sharing and with whom. And lastly, you could schedule an appointment with a peer financial coach. And that is something that any of us or any of y'all could do at any moment. If you do need financial assistance with us, you could contact us for an appointment either at our website. Now, if you do go to our website, we do have an international team of coaches that can, they're international students too. They know exactly what you might be going through and how you could get help. And that is one resource that I would definitely use. You just go to our website, and I believe there's a tab that says international teams. And then you can go into there to set up an appointment. You could also email us or give us a call. But yeah, that is about it for me.
As this international student who maybe doesn't know what their future is in the United States past their student status, do you recommend that the international students worry about credit and credit report? Yes, they should worry about the credit report if they have a social security number, because they want to make sure nobody is using it wrongly. But do you recommend that students worry about having and building credit here if they're not at this juncture sure, how long they'll be here in the United States?
I guess that would kind of depend, if they were going to stay in the United States or not. Because I don't know how other countries, how they operate. I know how America does it with our credit report systems and whatnot. I don't know if they're linked internationally or not, or if there's some type of database that has all that information. I'm not 100% sure. Yeah. But it's something that because it depends on how you look, I guess, at credit. It could be, if it's useful for you in your time here, I would say it'd be important to, kind of follow all this and, try to build it. At least the things you're doing to make sure you have good credit, those are good practices. I think for anyone financially and their long-term financial health, just, being diligent about it would help. But, I think it kind of depends, if you don't plan on staying in the United States, and I wouldn't necessarily say you'd have to worry about building it. But, it's not something that's necessarily hard to do at all. Even if it's you get that secured credit card and that's all you ever do, and maybe you can use it. Well, I guess it depends, because now that I'm thinking about it, if you take that credit card home or back to wherever you moved, you can probably still use the credit card. So yeah, I think it'd be important to continue to do, even if you are here. It's just, if you're going to keep using the financial help that the services that you're getting from these credit, loan or loan offices or credit cards, then you should definitely keep up with it.
Awesome.
But, yeah.
Well, thank you, James.